Uh, Good morning, everybody. Today is April the 24th, and as usual, we'll be going over analysis for US 30, gold, and EU. So we just need to wait for the market to stabilize. So right now it's market open. You can see for US 30 is coming into heavy supply zones. So heavy sell zones all around. Gold is ideally coming down to a demand zone. This is on the 5-minute time frame. So we do have these demand zones right now that gold is falling down into. The other one, EU is still in heavy supply zones, but as you can see, right, we've been waiting for EU to keep coming up and going over this supply zones to the top. So I expect EU to break above here. So currently it's in a supply zone within a supply zone, but ideally, right, you need to look at where is price likely to head. So to me, right now we don't have any bullish area to ride EU up. You can see, I think it came off of a this was just a 15 minutes, so nothing major. So in any case for EU, I would wait for any reversals. I would wait for EU to reach around 1.0756. But you can see EU, we're in heavy supply zones. Gold is coming off of a demand zone. US 30 is. So I think today that most of the trades or the highly likely trades will be for US 30. You can see we are in nothing but supply zones. We do have an hourly bullish high here. So as usual, we'll just start drawing our trend lines on the 5-minute, just the trend lines that have occurred in the past 3 or so hours. So we have these two trend lines right there on the 5-minute. Then we go to the hourly and do the same. We see if there's any established trend line on the hourly. I do see this lower low to this high low. So right there, that's on the hourly, and also to the bottom, right? Same thing right there. Let me see something on the hourly. So this one on the hourly is a bit tricky because we have this lower high to this lower high. Just 1 second. I'm trying to see if well, I definitely know this is the trend line we traded last week. So this is definitely but price is so far away from that trend line. So let's stay away from that on the hourly. I'm trying to see which trend line here makes sense. Hmm. Yeah, so on the hourly, let's just use these two trend lines. They're the ones that make ideally sense. But for US 30 here, I am looking for sells. The reason for that is because we are in a heavy supply zone. We do have an hourly bullish high here. Hourly bullish low was somewhere around here. So we are in an hourly bullish high. But for me, all of these supply zones supersede any bullish zones that we have. So after the market comes down in the first, in the next 6 or so minutes, I will be looking for entries for a sell. Um, if you want to enter in on impulse, always use proper risk management. I don't enter any trades on impulse. I don't enter trades on impulse on the live session. Every trade that I take has to make sense, and then I'll end up calling the trade. But for here, I will be looking for sells on US 30. So for gold, let's do the same thing. See if we have any established or static trend lines. You can see price rejected from this supply zone within a supply zone. So for this trend line, I will draw um, so here from this high to this see which trend line touches. So while you have multiple points of structures, you want a trend line to touch more than 1 point. So right here, yes, you can draw from this higher high to this lower high, and sure, it would ideally give you a better entry, but while you have a bunch of structures, you want the trend line to touch ideally most of them, or to at least touch, or to try and touch most of them. So that's the one I see from the upside. From the downside, there's this lower low to this. Yeah, gold is no. So for the bottom one, I will do that one. US 30 might be dropping. Okay, so US 30 is coming off of a supply zone. So pay attention to this darker shaded areas, because that's where you have more likelihood for your trade to be valid, or for your trade to ideally go in your direction. Because you can see where US 30 is rejecting from. This candle closed below the trend line, and also we are having a spike in liquidity to the downside because we have a supply zone within a supply zone. Now, the other thing to look out for, since we have an hourly bearish high here, I'm sorry, an hourly bullish high here, if we do get a closure above this trend line and retest and closure above this trend line, price might keep going up back to this zone that's 33,876, where we have ideally the next supply zone within a supply zone. So right now, ignore this previous daily high, because again, I don't mark previous daily highs until, and previous daily lows until Wednesday. So for right now, let's use the Friday highs and Friday lows. Remember, for me, Friday highs, Friday lows, and Monday highs and Monday lows, I never delete them off of my chart. So those are always static. So for the previous daily high and daily low, I normally start marking it on Wednesday going forward. Yeah, so we're still waiting for this candle to close because again, we don't want to trade the first 10 or so minutes after market open. So gold is that. Let's see if we have gold trend lines on the hourly. Yes, we do right here. So it's very rare to find trend lines on the hourly, especially with these high low points. It's not every day that we get this. So whenever we get this, it does make sense for us to use them or to mark them up. Do this. So that is that. And you can see gold currently squeezing on the hourly. What do we have around here? We have a 4-hour bullish low. We have a 15-minute bullish low, bullish high, hourly bullish. What is this? Hourly bullish. Yeah, hourly bullish low and bullish high somewhere here. So gold is possibly headed to the upside, but we definitely need a confirmation for this. Let me see. I definitely see a buy on gold here. Reset chart view. Let's see EU. What do we have on EU? I do see a trend line to the upside. This one is so far away. So I won't use that. I'll use this. No, not even that. I'll use this lower low to this high low. And then I'll use this lower high to this higher high. So that's the trend line on gold. I'm sorry, on EU. So for EU, I'm definitely expecting price to move up. I really don't see any obvious trend lines for EU. Also, we don't have any bullish zones on EU. So I would rather catch this buy on gold. So if we do close above this 4-hour bullish low, we ideally want a excuse me, a candle to close above the 4-hour bullish low and above this demand zone within a demand zone. A safer trade would be if price closes above. We have a 5-minute closing above this hourly trend line, which would be around closing above the 15-minute bullish 15-minute bullish high and bullish low. So ideally price coming here. So path, and hopefully I'm not muted. So right, price always goes, picks up liquidity somewhere and then comes back, right? So if price is to come down to maybe 1970, do this, come around here and then go up. So right now we can start looking at trades. Let's see. So US 30 is definitely bullish. Gold is bearish for now. Price is below the 9 EMA on the 5-minute. EU is mixed, but I'm expecting EU to keep shooting up. I'm expecting EU to break this supply and head back up. So ideally, EU would be one of those trades we wait to catch a reversal. We just wait for closure. What is it? For closure below the 9 EMA, retest and closure below the 9 EMA. So that's probably what we want to do for EU. So I'll not focus on EU for now. I'll look at this 2 trades. Yeah, so for gold, we just need gold to go back up. So for US 30, what do I see? So remember, for a any static trend line, the trend line has to be retested, or doesn't have to be retested. More times than not, the trend line needs to be retested. So if price is to come back down, right, where is it likely to come back down to? So around this 15-minute bullish high and bullish low, which is ideally where we have that particular trend line. So this is just a matter of waiting. So personally, I would rather US 30 to keep pushing up and go through all the supply zones, and then at the very end, maybe after 30 or so minutes, we can have a reversal to the downside. Because unfortunately here, other than this hourly bullish high, we don't have any other markups around here. And I really don't want to take a buy based on off of this all the supply zones we have to the top. So we either need this candle to close above this trend line and have a retest and closure above. But even then, I really don't feel like buying in an area that has so much supply in it. And you can also see the hourly. The hourly trend line is still holding. Let's see what price point the hourly trend line is. So the hourly trend line is about around the Friday high. So around the Friday high, maybe you can catch 10 or 20 pips or so. So we'll see when price comes. And also look at the hourly, right? We're just forming a golden cross on the hourly. So this is where for now, I just need confirmation because the hourly is telling me that US 30 is likely to buy. However, on the 5-minute, we have all this supply zones. And keep in mind, the way I draw these supply zones, they might be from the monthly time frame. So I draw them from the monthly time frame down to the 15-minute time frame. So even though we have a golden cross forming on the hourly, you can have a supply zone here that's from the monthly or the weekly. So ideally, that would supersede that. And also, if you guys attended the Friday session, you remember I did say be wary of golden crosses and death crosses that form after you have a lot of consolidation. So here you have a golden cross forming, but previously the 9 EMA and 200 EMA have been ideally next to each other. So when trading a golden cross or death cross, right? When you get a golden cross, look at where the death cross was, right? Was it valid? How did price react? Because you want, if a golden cross forms, you want price to keep pumping and pumping and pumping. You don't want a golden cross to form, and then in the next hour or two, you have another death cross forming. So that just shows consolidation in the market. So right here, even though we do have a golden cross on the hourly, looking back, where was the last death cross? Around here, around 23, so about 10 hours ago. So that's not really a trend, in my opinion, because if you look at, on the other hand, like this one right here, if I keep scrolling back on the hourly, let's see, this one is a perfect one. So this golden cross was formed on the 26th of March. So then the next death cross was ideally, here it didn't really form. Here was just a bunch of consolidation. This death cross was ideally what, a day, ideally a day later. So to me, that's more better to trade. So I really don't care about this golden cross on the hourly, but I do want price to go up so that I can get a better entry. So gold is probably the nearest trade that we will get. Just ignore that Bitcoin trade. Trying to see what I can also see on my charts for gold. And I definitely also have some trend lines right here on my MT4. So ideally, we're looking for this hourly, a 5-minute candle to close above this hourly, which ideally would line up with this 15-minute bullish high, 15-minute bullish low, and we also have a 4-hour bullish low to support any buy, and we also have a demand zone within a demand zone. And it will more than likely align with the closure above the 9 EMA. So let's just wait to see if we get any entry for there for gold. Let's see. All right, so there goes US 30. So for this one, as much as we're seeing this push to the upside, if you do, so the other trade I do see, as I'd mentioned, is a closure above this trend line and retest and closure above, which would line up with closure above the hourly bullish high. US 30 is definitely bullish. So if that aligns with some of your other confluences, feel free to take that trade. But I'm not gonna call that trade on the live session. It's not gonna be one of the trades that I say to enter. So but if you have any confluences that show a buy on your end, I would say wait for closure above 33,834, and then retest and closure above that zone. And then at that point, you can enter into a buy if you so choose. And again, keep in mind today is Monday. So Monday is definitely bound to have a bunch of manipulation in the market. So you want to be safe while taking any trade. I wouldn't really, unless you know what you're doing, I wouldn't really advise you guys to just hop in and out of trades. Yeah, so for EU, EU just wait for closure below the 9 EMA on the 5-minute, and then a retest and closure below. So ideally, what I would like to see happen for EU would be price to keep trending to the upside. Price to keep trending to the upside. So we have this, possibly this, and then we have a slow and steady trend. And then around this zone, which ideally would line up with the current monthly high, we get a closure below the 9 EMA, maybe somewhere around here, retest of the 9 EMA around this zone, and then we do this. So this is ideally what I'm looking for EU to do. Gold, I did say we need to wait for closure above. So right now, let me watch US 30 and see what we have. Let's see. And I definitely don't want to call any risky trades. So as much as I at some point I may take some trades by myself, ideally the trades that I'll call here, I just want them to be A plus trades. So keep in mind daily we've gotten at the very least one trade a day. Some days we get like 3 trades, but I definitely want to select trades that do make sense and trades that are valid. So here keep in mind we do have this hourly bullish. I just don't want to have too many colors on here. We definitely have an hourly bullish high here. We have a hourly, where was the other hourly bullish low? Just a second. So this was a sort of a big zone right here. Yeah. So this is the hourly bull. So we don't only have supply zones, we have this hourly order block that's right here. So for any buyers, like I said, keep an eye out on how this candle is closing. You can also see that we are breaking above this trend line on the hourly. So any entry for a buy, I'm not going to call that on the live session because the reason I'm not calling it is because we have too many supply zones up here. So if we didn't have that, then I would definitely feel more confident saying to enter into a buy. So here for any buy, watch for the retest of the hourly bullish high around 33,834 and closure above, or retest of this trend line, which is ideally around 33,842 and then closure above. So that's what you'd be watching out for this. And looking at our indicators, let's see, I'm pretty sure US 30 is in a bullish channel. If I turn all these markups off, yeah, you can see we're in a bullish channel and so far above the bullish channel. So, and this one 33,834 was around here, 33,842 is where price is coming back. So remember for established trend lines, always expect price to come back and retest those zones. So it's always better to wait for confirmation. The what? The other thing, let's see what gold did. Oh, gold is doing. Okay, yeah, so let gold. For any buys on gold, let's see if we have any structure. So remember we did talk about this structure that gold is trying to complete on the hourly. So the next possible structure is around 1950 area. It might not go that far in during the live session. But watch out for 1968. So for me, when I'm looking for trades, I really don't focus too much on this lighter shaded areas like this, just general, like for example, right, this is a demand zone. This darker shade of green is a demand zone within a demand zone. So for me, what I focus highly on is the darker shaded areas, because right now, sure, price is in a demand zone, but you need to ask yourself, is there another is there another demand zone below that? Yes, right. Gold has a bunch of demand zones to the downside that ideally maybe 300 to 400 pips, right? So you don't want to be catching the top. So at that point, I say I'm not going to focus on just demand zones by themselves. I would rather focus on the demand zones within a demand zone. So instead of trying to buy at 1974, maybe look for buys around 1969, 68 area, and so on and so forth. So I just use the lighter shaded, as much as price may react from them, I just use them to point me to the next direction, because I'll ask myself, okay, where is the next demand zone after that? So we have a near retest of that. But you want, for these trades, you want candle closures. So you just don't want, if you hop in on impulse, always use proper risk management. But you always want these candles to close. So this candle attempted to retest that trend line. Ideally, you would want to see a perfect retest, but you won't get that every day. Yeah. So the other thing, see, we have a minute and a half before that candle closes. Yeah, so EU is still, oh, I always forget to shift EU from the 30-minute time frame. Okay, so this is the 5-minute time frame. So ignore the markup that I had done because that was the 30-minute time frame. So this is the 5-minute time frame. On the 5 minute, we are still in that supply zone. We did a supply zone. To me, I still see, you always need to ask yourself, what is price likely to head? To me, I see this supply zone to the top. So because EU has been attempting to break through all this supply zone since last week. So even remembering how we traded last week, right? We were always in this red zones for the whole week. So if it's broken through all of this, right, what's stopping it from breaking through and going to the next zone, which is around the monthly high? And at that point, you'd get a much better trade, because if you remember, EU last week was just trapped in between us, this resistance up here and this support somewhere down here. Yeah, so let me see. This is what, okay, you're getting that retest. Yeah, so if you're gonna, I'm not gonna call that trade. If you do want to enter it by yourself, feel free. I will test it out. I will test it out and just see how it's going to go. But again, this is not a trade that I encourage anybody to take unless you using proper risk management. So I just want to see how this trade reacts. And also it's a learning experience, right? Because if we see that, okay, if this trade works out, even though it wins, and I'm not going to mark it up. If it wins, we would be like, okay, why did it win? We were or personally, I entered on the retests, waited for the closure of this candle. But if it doesn't win, then we know that you don't catch a buy in a heavy supply zone, or you don't catch a sell in a heavy demand zone. And right now it's testing that hourly bullish high. So that's also going to be a determiner. So let's go over what we have so far for the month. So far for the month, we are up 1.875. For last month, we made 3.28% in a week. So ideally, if you've been taking any official trade that I call on the live session with the proper risk management. So if I ever talk about a trade and I don't say for this trade use a 0.5 point whatever, that does not count. I will always, for any official trades, I will always say use this 50, and I always mark it up on the chart. So I always say use 50 pips or use 100 pips, use 0.5% risk. But for this month, we have 1.875 return so far. So if you started taking the trades with me since the last week of March, you would have been up about 5% for your account. So ideally, you would have qualified for a retest for any phase 1 challenge. That's if you weren't trading by yourself afterwards or using signals. So this just counts as the trade or any trades we take on the live session. What else do we have? Yeah, so until price is away from this zone, US 30 can be easily manipulated. Yeah, today is another day that you guys can ask questions or ask for clarifications, because it's a Monday. So Mondays and Fridays, price is bound to be manipulated, and ideally Mondays, if you've seen what the other admin Steven has talked about countless times in the group, he says that Mondays are ideally when the market makers are ideally showing where price is likely to head for the rest of the week. So you can keep getting faked out during a Monday and also like a Friday as well. So there's no need to force any trades. If there are no trades, you don't have to trade every day. Worst case, you can use 0.1 lots to test out a small strategy you have. So unless something is really obvious, that's the only time I really call a trade during Monday. So if any of you have any questions, feel free to go ahead and unmute yourself and ask. Also, the last thing, this is the last week that the indicators and access to indicators and signals will be free. If you remember, I did mention this countless times when I started this group. We weren't using any indicators or any custom indicators. The only indicators we're using are the 9 EMA and the 200 EMA, which ideally are free trading view indicators. The trend lines, of course, it's easy to draw a trend line. These other indicators are just some custom indicators that I had built based on some of the strategies I developed. So this is the, I know I've been extending the free trial period, but this is the last week that access to signals, access to indicators will be for free. When I started trading live, I didn't even have any signals. So signals were just something that came up along the way. But access to live trading will still remain free. The Zoom sessions will still remain free. Everything else that I started doing when I started this group will remain free, but only the signals and access to the indicators will be by subscription only. I haven't yet figured out how much I want to charge, but it will probably be somewhere between 100 and 150 a month, maybe cheaper if you do like a 3-month or 6-month subscription. And for the first 50 or so people, about 50 people, if you subscribe for at least 6 months, that price will be ideally for life. Because I definitely see, like right now, I'm having 2 other systems built by my programmer that ideally wait for like retest of the 9 EMA and whatnot. So down the line, also beginning next month, I will pour a good amount of resources marketing this group. I'm targeting to have at least 1,000 people in this server for the next year. And in like 5 years, I'm anticipating this group to be one of the biggest trading groups out there. So definitely over time, some of these systems will go up in price, but for the first 50 or so, if it's 100 or if it's 150, even though at one time we ever have an amazing system that I charge 500 a month, you'll still pay $100. So keep in mind, the only reason I'm charging is because I have to upgrade a bunch of tools that I'm using. So for example, Zoom, I have to pay for the Zoom package that allows more than 45 minutes. Per meeting. I have to pay for Telegram TradingView Premium. I have to pay my coder to develop all these indicators. So right now, the indicator I'm having an indicator built for a reversal strategy. And ideally, the coder I'm having doing that is normally pretty quick. So he'll probably have it ready by the end of the week. I'm also having, not a lot of people know this, but I'm also having an EA built that ideally will be pretty much hands-off. All you have to do is set the input parameters, and then that's it. You don't have to, it should manage every trade for you. It should trade with a trend. It should automatically close trades if a trend changes. So it would ideally be set and forget. But that's taking a lot of time because I'm having like 5 programmers building it. So it's something that honestly, I haven't seen that in the market before, but if anybody knows of an EA like that, let me know. But it's something, as much as because I've tested a lot of EAs and I was always curious as to why some of these EAs that were built, were not doing some aspects. So again, I'm putting a bunch of resources into that. But anyway, so more to come during the week of the official pricing and all of that. But I've been mentioning this is coming down the pipe like for about 2 months or so. So it's no surprise. Yeah, but today I really don't see price doing anything. But here, right, you need to keep an eye out on what gold is doing. So gold right now is still rejecting from this demand zone within a demand zone with this from this 15-minute bullish low. But you can see every 5-minute candle is closing higher and higher. So if we do get a closure above, right, if we do get a closure, the other thing that happened, which is ideally might not be good for a buy, we just had this hourly close, right? So remember, for every closure below or above an established trend line, you normally expect the next candle, especially the hourly, you normally expect the next hourly candle to retest that trend line. So this right here might not be good for a buy, right? Because here we had, on the hourly, we had closure below this established trend line. And then the next hourly candle ideally tried to retest that trend line, and now it's trending to the downside. So for gold, be careful about trying even to catch a buy at this 15-minute bullish low. Primarily because of this hourly trend line, how it's behaving, because it's playing out like a bearish trend is forming. So just be careful about that. US 30, what do we have on US 30? So if I take this, or if I take this zones off, you can see the 4-hour bullish high is around here. So you can see this candle retested the 4-hour bullish high exactly to the pip. This candle is trying to break below, but is being supported by the 9 EMA. So for US 30, we are still in an uptrend for US 30. 33,817. I'm seeing to see if we can see a possible bullish hammer. No, we're not. Yeah, so US 30 again, to me, US 30 is in a dangerous place. Likely to be manipulated, but I do see US 30 continuing to the upside. For me, the best sell on US 30 is around, ignore this previous daily high, is around the previous weekly open, which is around 33,957 and around 34,000. So between 33,950 and 34,000, to me, that would be the ideal sell on US 30. So yeah, so for any buys in here, they're not gonna count. I haven't called any official trade on US 30. So right now, we haven't taken any official trade. But I did say if any of your confluences line up for a buy, we do have an hourly bullish high to support this buy right here. If you want to be safe, your stop loss should be ideally below this trend line and below the 15-minute bullish low. So for any buys, your stop loss should be about 33,770 if you're going to enter any buys, because at that point, the stop loss will be below the trend line. The stop loss will be below the Monday low. No, this Monday low is for the previous week. So below last week's Monday lows, below the 15-minute bullish high and bullish low. So yeah, so if you have any confluences for a buy, just use that. I do see a buy being valid. The only reason I don't want to call it live on the personally, I am in 2 buys right here, but they're not going to count as official trades. The reason for that is because we have all the supply zones up here. So this is just a trade or trades that I'm testing to see how taking, for example, here, taking a buy in supply zones within a supply zone, in all these supply zones, how that should work going forward. Yeah, but so those are just personal trades, but on the live session, there's really no official trades. I don't think we're gonna get any trades on gold, because here the other thing to think about, you can have a bunch of fake outs, right? Because trend lines are give possibility for a bunch of fake outs, because you can have closure below this trend line, and then the next hourly candle, you can either have the retest and then continuation to the downside. But on the other hand, guess what can happen, right? This candle can close as a bullish candle, and close above this trend line, and then the next hourly candle can again fake you out and close below. So until this particular candle, hourly candle right here, closes, that would be the best. It's better to wait for the next hourly candle to close for gold, so that you can see what direction it's picking, because right now you can easily get manipulated in any direction. But based on how US 30 is moving, I do see the other thing you want to look at, if you're in a trade, look at how the candles are closing. So if you're in a buy, ideally you want to see candles closing higher than the previous candle, and so on and so forth. If you're in a sell, you want to see ideally some momentum to the downside. So just keep that in mind. I'm not sure. I don't think we're gonna get. So for gold, I don't. Gold is resting on a 4-hour bullish low. I don't think it's worth calling any trade on gold right here, because we are bound to. It can definitely hit take profit, but the possibility of the trade winning and losing to me is ideally 50-50. I don't feel like taking trades that are 50-50. I definitely expect EU to keep moving up. So Unfortunately, there's no buy confirmation on EU. So for EU, I'll just wait for closure below and retest of the 9 EMA around the current monthly high. So to me, that's the trade that will make more sense. So US 30, you can see US 30 is holding in this zones, holding this trend line. Yeah, I still expect US 30 to keep pushing to the upside. But other than that, let's see, this account that's taking the signals, the gold US 30 and NAS signals. So today, ideally, I'm at break even for the day with this account that's trading this. So remember, I'm copying from a $1,500 live account to a 300K challenge to a 100K funded account, and then to this 100K demo that I just put in here for y'all. And you can see beginning April 11, we had a steady growth all through 9%. And then the last 2 days of last week were terrible, even for the signals. So we lost about 4% or 4.5% of that account's value. Today, the day has ideally been a break even. I've stopped trading that account for the day because I'm testing out something else for it. Yeah, so that's the only, unless if anybody has any questions, feel free to go ahead and ask. But right today, I'm not sure we're gonna get any official trade. So it might be one of those days we end the live session early. The other thing, I know on Friday we did talk about a lot about psychology. And some trading sessions ago, I did mention the book Trading in the Zone by Mark Douglas. And I did say also, this is an amazing book to read and have that ideally just listen to a chapter a day. I forget how many chapters it is. The book does have an attitude survey that ideally tries to groom or show what kind of trader you are. It's ideally, the survey is 30 questions. So personally, what I do like every day, so I've broken, so for example, a day we have a week we have 5 trading days. So ideally I try to go over 6 questions daily. I just keep rinsing and repeating. So 6 questions today, the next 6 tomorrow, and so on and so forth, ideally until I get good answers, right? So we can, right now, I don't see any trade to call, and you can see the market is ideally dying down. And I'm not sure what news we have today, so I didn't even look at news. And also for the rest of the week, I feel like we have heavy news maybe during the week. So today we don't have anything. So maybe NFPs next week or something. Okay. Yeah, so we don't have any news today and the market is ideally dying down. Yeah. And so I did say gold, I'm not looking to trade gold on the live session because I look at what it's doing, right? We can get a bullish close, but I don't feel like taking a 50-50 trade. EU, I did say where I expect EU to go. I would rather EU to do this, which I'd drawn this. I thought it was on the 5-minute, but it's on the 30-minute. This, and then around this zone is where I would be waiting for closure below the 9 EMA and then retest and closure below the 9 EMA and then for the move back down. So I'll be looking to sell EU around here, around 1.10, 700. To me, that's the high probable trade on EU. I do expect EU to keep going up, but I don't have any bullish bias for it. US 30, same thing. We don't have any official trade on US 30, but I did say I am testing out this buy around the hourly bullish high. It's not a trade that I feel comfortable calling on the live session as an official trade. But for anybody who did enter or who enters this trade, use proper risk management. I'm not going to say use 0.5%, use whatever, but so long as you use proper risk management, that's all that matters. Any questions from anybody so far? Okay.
No.
So for today, we can do the same thing, right? So this attitude test from trading in the zone, we'll be going over 6 questions every day for a week. So that should ideally make us do all the 30 questions in a week. So we'll be doing this every day. So until you get right, ideally, even for me, based on how I am as a trader, there's still questions here I answer, and then I see why sometimes I get into some losses. So you'll never have 100% win rate, but reduce you can reduce your losing rate based on your psychology. So some of the things you want to see, like for question one, to make money as a trader, you have to know what the market is going to do next, right? So it's ideally agree or disagree question. So like right here, a lot of people, especially when they find people who have a lot of experience in trading, they expect them to know everything and to know what the market is going to do next. So ideally, as a trader, initially you try to see what the market is going to do next, but nobody can ever know what the market is going to do next, right? Not Warren Buffett, not any amazing trader out there who's very successful. The thing you do as a trader, you start like the same thing I do every day. I analyze what the market is doing. I mark up all these order blocks. I mark up the demand, the supply and demand zones. And for this trade, right, I could have easily called it the buy I took. But again, I don't want to make anybody FOMO or just enter a trade just because I'm testing something, right? But I did say this one, I did say we have a lot of supply zones here. We do have a hourly bullish high, bullish low, but the reason I didn't want to call it as an official trade is, right, we have all this red. So this is like driving past a red light, right? So if we didn't have all these zones, yes, it's a trade that I would have said, hey guys, yeah, this makes sense. But I want you guys also to know that even for next time, and you see me saying, oh, we are going to take a buy here, and then you see Michael is taking a buy in a supply zone, you would say, oh, why are we taking that buy in a supply zone? And then I can say, oh, wait, that's not a good trade. But here it's ideally just testing. So that's why I didn't want to call that. So for this one, ideally, start the day, do your analysis of the market. You don't know what the market is going to do next. You can flip a coin, somebody who flips a coin can have probably a better win rate than somebody who just FOMOs. So the best you can do as a trader is to study how the market moves in the past, and then wake up every day based on how the market has moved in the past. Try to find a pattern, right? Try to find a pattern, whether it's order blocks, whether it's supply and demand zones. See how price reacts from those zones. Look at the 9 EMA, look at the 200 EMA. How does price react when price is forming a golden cross or a death cross? How does price react from a trend line? Study that, internalize that, and then apply that each and every day. So to make money as a trader, you don't have to know what the market is going to do next. You do your studies, you find setups that have worked out in the past, and then you enter your trade with proper risk management, and then whatever happens, happens. So you don't have to know what the market is going to do next. To me, eventually, that's the answer you should, like once you develop that mentality, that's the answer you should have at the end of that. Now, some of you might still be in the zone of, oh, you need to know what the market is going to do next. That's not it's not a bad thing. It's still learning. So here, there's really no wrong or right answers. But just know, like, for example, this question number one, if you did answer yes, it doesn't mean you're wrong. It just means that you probably need to improve on something, improve on some aspects of your psychology. And then, hey, and then afterwards, once you redo this test and you say yes, and then you can mark this on your journal and say, I've ideally worked out that part of my psychology. So the second one, sometimes I find myself thinking that there must be a way to trade without having to take a loss. So for the most part, when I was starting, number two, yes, I thought that was a yes, because I was always trying to avoid a loss. So whether a trade is in drawdown and then I keep extending or increasing my stop loss until I blow my account, until I lose personal funds. I've done that in the past. And I told you guys, like on Friday, I've lost a ton of live money. But as soon as I realized that I don't have to win any trade, that taking a loss is part of the game, then at that point I said, hey, Michael, for any trade you take, let it have a defined take profit and a defined loss. No mental stop loss, no mental take profit. Have a defined take profit, have a defined loss, let the trade run. So this is what a lot of traders struggle with. I I just recently moved away from, not recently, maybe a few months ago, moved away from thinking that I have to win every time. So nowadays, that's why I'm good at taking losses. And actually, if you've seen some of the results that I've posted, nowadays I just have, I've noticed that for the last few weeks, I've just had blue days. So sometimes I have this red days, but more times than not, I've just been having uh, days that are full of blues. And you can see that, yes, right? I'm taking losses because this is how you can tell this trade hit stop loss because I had set a TP and stop loss for that trade. Also, the other trade that was here, like a $3,000 loss, you can see that this trade, I let it hit stop loss. This trade as well, I let it hit stop loss because what? Because losing is part of the game. So, ask yourself, how do you interpret losses? Number three, making money. Let's see. So nothing really is coming up. Again, the market liquidity is dying down. So nothing really is coming up. So number three, making money as a trader is primarily a function of analysis. So I can see a bunch of answers in this in this trade. I'm sorry, in this number or in this question. But ideally, you want to make analysis to be the basis of all of the trades that you take. Sure, sometimes you'll make money from FOMO. Sometimes you can make money just from saying closing your eyes and hitting buy or sell. But to me, what this question is trying to push you to, number three, is that every day before you take any trade, make sure you analyze that instrument. You can analyze it from the 4 hour, you can analyze it from the hourly. If you don't have time to do a lot of analysis, you can analyze from the 15-minute and below and find a trade. There are people who trade on the 1 minute. So make analysis the first thing you do when you look at the charts. Before you even take any trade, make sure you've analyzed that instrument. And that's why every morning I send you screenshots of ideally what I'm looking for, or my analysis on US 30, my analysis for gold for that day, and my analysis for EU for that particular day. And Steven does the same thing for, I think for him is the DXY. And definitely follow, whatever Steven posts, I tell you guys, this guy is a much better trader than me. He's one of the people that ideally I learned from how to take snipe entries. You've seen me take a bunch of no drawdown entries. Honestly, that wouldn't have been possible if I hadn't met Steven. So watch also how he marks his charts, the analysis he makes, and then just go over that. And you can tag him in the group and ask a question if you don't understand anything that he's brought up. The other thing, losses are unavoidable component of trading. So yes, to me, number four, you can't avoid losses. So you have to, as with anything else in life, you have to lose in trading. In any case, I tell people it's better for you to lose in trading, so that you can know how do you react to losses, because there are people who are going to lose a trade, and then the next trade, they're just FOMOing, they're just revenge trading. So if you get to a point where you're losing a trade and you're not feeling any effect, so while you lose a trade, like one thing when you read this book, Trading in the Zone, they will ask you, why do you feel bad when you make a loss, right? So if you're feeling bad, I mean, it's human, but sometimes it's ideally maybe you've over leveraged, you've revenge traded, or the trade didn't make sense. So that's why I always tell you guys, if a trade makes sense, don't care about take profit and stop loss. Let the trade ride. If a trade, the only time you ever feel bad about a trade is because the trade did not make sense to you. And then now you're regretting and blaming yourself and said, I'm so dumb, I should have waited for this confirmation. No, I mean, you're not dumb. It's part of the progress. So just understand that before you take any trade, stick to your strategy and realize that the trade can hit stop loss, the trade can hit take profit. If it hits take profit, then you say, okay, this strategy is still working. If it hits stop loss, go back to it, say, why did I take a loss on this trade? Did I over leverage? No. Did I stick to my strategy? Yes. Okay, maybe the market just moved against me. That's purely normal. You move on to the next trade. Number five, my risk is always defined before I enter a trade, right? This is big during the live trades that we take. I always tell you guys, for this trade, take 0.5%, take 0.75, take 1.25, and that's the basis of how we track the returns here. because these are the trades we take on the live session. And I always define the risk you should take before any given trade. And the last question for today is, in my mind, there is always a cost associated with finding out what the market may do next. To me, this is a yes, because unless you're using demo, but even in demo, you're losing or gaining demo money. So you have to be in it to win it, and think of it. Don't think of a loss as losing money, like we covered on Friday. Think of a loss as tuition you have to pay to understand why that move worked or why that move didn't work. So if a trade goes in your favor, brings money to your pocket, it should be like, okay, this strategy is working for me. Journal that and say, okay, this strategy has worked for me five out of 10 times, 5 out of 6 times. Okay, this other one, I lost money on this trade because this, and that. And that's it. So we went over the first 6 questions today. We'll go over the next 6 questions tomorrow, the next 6 questions the next day, and the next day. Yeah, for today, I don't see any other trades to take. No need to force any trades. Personally, I'm in a buy from US 30, from this hourly, A, from this trend line, and B, from this hourly bullish high. I didn't call the trade on the live session because I it wasn't to me, it wasn't worth it putting your guys' accounts at risk, even though we could have taken it for a 0.125. I just want to see how this hourly bullish high will react from this supply zones within a supply zone. The other thing I also looked at is also we had these trend lines. Price was closing above. Price was above also the 9 EMA. So I did have some confluences, not ideally what I would love to take. So this trade, I would ideally count it as a B setup or C setup trade. So remember, we want to always take A plus and A trades, trades that make sense and trades that ideally go to take profit in about 10 or so minutes. So even for me, this trade is only like maybe 10 or 20 pips in profit. So that's ideally nothing. So keep in mind, even for the trades we take, they're normally about 50 pips profit. So don't FOMO, don't jump into any trades. Wait for, so EU, I did say wait for EU to keep going up this way. I do expect EU to continue to the upside. Wait for a reversal around 1.10650. So ideally here, what you would be looking for is closure below the 9 EMA, retest and retest of the 9 EMA and closure below. And at that point, you would ideally get an amazing sell for EU. Gold, wait for the closure of this candle. So the current hourly candle is what's going to tell you where gold is going to go. If this current hourly candle closes below this hourly trend line, then we might be ripe for a sell. However, you want to see how far below this candle closes, right? Because this candle, this hourly candle can close above the 4-hour bullish low, and then from there buyers should price all the way to the top. So ideally for any sell, you want this candle to A, close below the hourly trend line, and also close below the 4-hour bullish low. Because after, if you look at the 4-hour bullish low, we don't have any other zone to stop gold from dropping until we get to the 30-minute bullish low, bullish high, bullish low, to the Friday low, so around 1971. So if gold closes below 1977, we are possibly going down to 1971, 1969, and possibly even lower than that, because you can see we don't have anything holding gold here for now. Does anybody have any questions? If not, I will see you guys tomorrow. So if you have any questions, just go ahead and ask. Okay. So I mean that's good. Does anybody have anything? Cassie? No. And you guys can hear me, right? Hopefully I haven't been muted this whole time.
Yes, yeah.
Okay. So one last time, does anybody have any questions regarding anything that I've gone over today? You can see the market is dead today, so there's no need to force anything. Okay. Then I will see you guys tomorrow. I'll put in the group the thing about the subscriptions. during the week. If anybody wasn't here when I was talking about the access to indicators and signals, let me know and I can go over that again. But in short, this is the last week for free access to signals and indicators. But everything else will remain free. The live trading will remain free. The Zoom link will remain free. Yeah, but it's only the signals and the indicators that will be by subscription only, and that's only because that wasn't part of my package when I first started streaming live. So yeah. Any question? No?
Yeah,
Okay.
bro. There's one thing.
Hmm.
So tomorrow is news, right?
Tomorrow, let's see what's tomorrow. Tomorrow's Tuesday. Yeah, we have consumer confidence. Yeah.
Yeah. So if there's USD, like the orange folder, yellow folder for
Hmm.
USD, does for USD will that move the? Do you think that will move price like? Do you think when you said it will go to 2050? Will
Hmm.
the orange folder, the yellow folder move the market? Do you think? Or-
Um, so to be honest, I don't know. Like my answer, do I think something honest for me personally, the only news that I care, I don't want to put it that way because I don't want to seem like I don't care about news, but the only news I really care about is NFP, CPI, and FOMC minutes and conferences. All these other news to me, I don't care about them in this instance. I don't care about them in the instance that if I'm in a trade right here on US 30, like for now, so for now, since I'm in and those trades hit profit for me. So let's say I was in a buy. Okay, let me put it this. So today would be a good example, right? So
Yeah.
today, personally, I entered a buy, a first one buy here and another buy down here. I didn't call it live as an, so I'm not going to count the profits I made here on this. Actually, here on the spreadsheet, we'll just put 0 for today because we didn't trade or we didn't have anything. So for example, today I was in this buy right here, and then there was red news folder. Guess what? In this instance, I would care about news because I am in a supply zone, right? But if I was in this buy and we didn't have all these supply zones around here, I would not close my buy. So for here, personally, if I was in this buy and there was news after I got into the buy, I would have just set break even or exited the trade. Why? Because what is price likely to do? You can see, like, if I zoom out, and this is why I always talk about trusting your strategy. All these markups that I've drawn, US 30 is respecting them. US 30 is respecting this demand supply zone within a supply zone up here. US 30 respected this supply zone within the supply zone here. US 30 respected this demand zone within a demand zone. So to me, my strategy makes sense and price is respecting it. Now, if I was in this buy within a supply zone and news was going to be in 1 or 2 minutes, I would care about this trade. I would probably close it because to me, the probability was that news was going to push price down. So while looking at news, you always want to see, yeah, let news just be something to tell you that, hey, between 10 and 5, 10 a.m. to 10:10 or 10:30 a.m., whatever time, if you're in a trade, it's more than likely, it's highly probable you're going to hit take profit instantly or stop loss instantly, right? So just by knowing that, you look at, don't worry about news. Look at the trade. Is there a valid trade? So for here, let's say on the other hand, we were down here and I was in a buy. Let's say I was in a buy here. Let's say somewhere around here. And then there was news. There was a news candle. Maybe let's try and find a volatile candle. So let's say I was in a buy here, and then there was news, right? If I was in a buy here and there was news, trust me, I wouldn't have closed that buy because I am in a buy zone. So you always want to look what is around you. So if you are in supply zones and you're in a buy and news is about to happen, go ahead and set break even or exit that trade. But if you are in demand zone and vice versa, if you're in a demand zone and you're in a buy and news is about to happen, don't care about the news. Leave the trade open and then ride it. The only news I definitely be cautious on, NFP. CPI, and FOMC releases. The others ideally take price where it's supposed to go. So it's ideally just like Red Bull, right? It just gives it that extra kick. The worst thing that's going to happen is that you're going to get faked out and price is going to go back in your way. So before that's why you don't even see me going over news. Not that I don't care about it, but I care about my strategy more, because what I've found is that sometimes I'll be in a trade and then I see, oh, hey, there's news, and then I start doubting myself. So doubt is the worst thing you can ever have as a trader, because you'll doubt yourself, and then two things can happen. Either you're going to exit the trade early and it was a valid trade, and then price ends up going in your direction after news, and then you're like, oh my God, I could have been up 1%. I could have been, should have been, right? Or you can get faked out and then see, oh, next time, if I'm in a demand zone and I'm in a buy, or vice versa, supply zone and I'm in a sell, and it's right before news that's not NFP, CPI, or FOMC, next time, instead of getting faked out, I can double my stop loss and double my TP, and then use the same risk percentage. Yeah. So for me, if you ask me, what do I think this is going to push gold to 20? I don't know. But if I'm going to be in a buy tomorrow, so let's see, tomorrow is red folder news. If I'm going to be in a buy in a demand zone, I'm not going to close that trade. If I'm going to be in a sell in a demand zone, I'm not going to close that trade. So that's the easiest way. I don't care where price is going. I don't, I'm not unless you are like buying gold in bulk or solid or whatever physical form, and you just want gold to go to 2050. As a trader, I've learned not to care where, because way back I used to this is funny, right? For US 30, I rarely used to sell US 30. Most of my trades on US 30 were buys only, because US 30 is a directional asset and it's most likely to go to the upside in the long term. But as soon as as a trader, you can make money both ways. So long as your trade makes sense to you, don't care what news is going to do. Yeah. So that's my answer to that question. So
Okay.
just be cautious of where price is. That's all. Yeah,
Yeah.
because you don't want to be buying high and selling low.
Mm. So
Yeah.
you know how you said you should anticipate. How do you do that? How can you every single time that you've said, oh, the other day you said, remember, we'll go to
Mm-hmm,
2030, we'll go to
mm-hmm,
2050,
mm-hmm.
and every single time he went there. How do you
Mm-hmm.
know this? Like, how can you just know that as a trader?
So the first one is journaling, right? So when I first called gold going to 20,000 to around 2032, I remember was my first call, and then 2050, 2070. Gold, oh, no, I'm sorry, this is US 30. Gold was at 1812, and we actually had a live session. So gold, when I called it, was around here. So if I was a swing trader, I could have made a ton of money. Gold was around 18 to, I remember us trading. So guess what happened? Oh, and look, here's the other thing on the daily, right? What do you see? Do you guys see any chart pattern on the daily? So this is the daily chart on my right. Do you see any possible chart pattern that's coming up? No. So this is a possible head and shoulders. We have a left shoulder, this high high. We have a head, this high high. So we have a possible right shoulder that will form maybe around 2015, 2008 area. Now, if that holds, gold is coming back down. But anyway, how did I anticipate that? So what happened around this time? So you see this gap to the upside. We had news of some banks collapsing in the US, right? So the first one was a Silicon Valley bank. So you know what I did? I went back, and I also have a journal, right? So I have a journal that I put in everything that happens. When I lose, I put in why did I lose? What were the parameters that I lost with? Even for EAs, if I lose, if I hit drawdown using an EA, I document the settings that I was using. So for example, if I go to my journal on my phone, it's called Trading Lessons. Um, so trading lessons, let's see. I think it was numbered. Give me 1 second. Yeah, so like for me, trading lesson number 15, I learned this the hard way during the Ukraine and Russia war or whatnot, whatever you want to call it. So I wrote, in case of threat of war or economic upheaval, gold goes up and indices fall. So for example, when the Russia and Ukraine thing started, guess what I was doing? Gold, I remember trading that day. Gold shot all the way up, and I was just shorting, and I ended up blowing an account that day. So that's why I journaled that. So during times of uncertainty,
Mm.
investors, even in the past, anytime in history, they move money from paper money, or they try to get away from paper money and go to like commodities, so tangible assets. So commodities, I believe real estate also. You have what else? What else? What else did they move their money to? I forget that. I forget the other one. But on the other hand, gold is a hedge for inflation. So as far as I can, even before I started trading way back in primary school or whatnot, whatever you want to call it, we were always told that gold is a safe haven. So during times of economic uncertainty or during war, investors, and these are the smart investors, not the regular, not your regular mom and pop shop, big companies, big investors, they take money from bank deposits and buy gold. So they can either buy physical gold or they can buy gold back assets. So
Yeah.
knowing that, so seeing the collapse of the bank, which ideally, if you remember 2007, 2008 housing crisis, it was started by a very small bank. I believe it was in Greece that just collapsed. And then that started the whole snowball effect. So remembering what happened in 2007, 2008, remembering what happened during the Russia-Ukraine war, to me, it was a no-brainer that where is gold likely to go to? So I came to the charts, and then at that point, I'm like, okay, I'm just looking for buys on gold. Whatever happens, I don't care. I am just looking for buys on gold. So yeah, so it comes from remembering what happened, journaling, and then going back and seeing what is like. So always pay attention to world events or news events. I don't recommend you to watch news every day, but you're gonna get wind of like the major news events, because if you watch the regular CNN and all of that, you're gonna be depressed or something, because they only talk about killings and stuff like that. So, but watch out for the economic news. So if you're gonna watch any news channels, watch the economic news channels and see what's going on in the world. And at that point, you come back. Remember, trading. There are people who do technical analysis. There are people who do fundamentals. So the war and the bank collapse, that's ideally fundamental. So you see, how is this likely to affect what we are trading? And that's ideally, that's only what I did. I didn't do any technical. Maybe the only technical we did was to find where we can buy gold. But other than
Mm.
that, it was mostly fundamental.
Yeah. So during NFP, CPI,
Mhm,
FOMC, like you said, would you
mhm.
still would you still trade, or like, when you trade, would you still stay in like your in position like before? Would you close it out? And if
So
yeah,
if I was in a trade before NFP or FOMC, that's a good question. Because of my greed, honestly, I would probably stay, and whatever happened, because I'm not gonna over leverage. So honestly, I would stay, but I do trade NFP and FOMC and CPI. So like this one particular day right here, when we made 1.25%, we traded NFP. I think I forget. We traded some news event. Now, these are the day that we traded, we lost minus 1.25. Again, we traded heavy news. But during again, for me, heavy news, I've also journaled how the trade, how price is likely to happen, right? So for me, during heavy news, let me find a cleanish chart. So for me, during heavy news, let me try and find just a blank white area. Okay, so during heavy news, this is what I always look for, right? It hasn't changed. Maybe in future it's gonna change. So during heavy news, I don't care about fundamentals. I'm not even gonna look at what news was doing or what the news result was for. So during heavy news, I'm gonna wait for the first 5 minute candle during heavy news, right? So let's assume it's a bullish candle. The first 5 minute candle, let's say we have NFP at 8:30. So the 8:35 candle closes this way. So what I anticipate, so for this is only for FOMC minutes release, and for NFP, yes. So if we get a bullish candle, I expect the next 5 minute candle to close as a bearish candle. So that's what we did during that 1.25% day gain. We actually caught a sell. We got faked out by 1 or 2 trades, but we caught EU or gold or US 30 to the downside. So I normally expect the next 5-minute candle to go down. So most likely I'll automatically enter a sell up here. And then when price reaches here, most likely this, so the trade I'm really looking for is continuation. So if we get a bullish candle, I'm looking for continuation to the down, to the upside, but I'm not really going to waste this opportunity down here. So I'm going to ride like a short sell here. And then when this candle closes, if I'm still in my sell, honestly, I'll close the sell and enter the buy with a heavy lot size. Now, why do I do this? So number one, this is a pattern that has played out during NFP, during FOMC meeting release. I'll talk about CPI shortly, but this is a pattern that I've just played out automatically during these releases. The other one, psychology, right? If you're a market maker, or if you're a retail trader, what do a lot of people do after a huge spike? They try to catch what? They try to catch the bottom. So with this little move right here, I've gotten burnt so many times. I've probably blown like 5 or 6 accounts. Every time I trade, this is way back, I used to trade news. If I see a big spike, I enter into a bunch of sales here, and then maybe I make $100, $200, and then guess what? Price reverses and never comes down for the next 5 hours. So this is dependent upon this pattern. From blowing accounts, I've journaled this particular pattern, so that's how I trade it. The opposite is true, right? If you inverse this pattern right here, if you get a bearish candle during NFP or FOMC release, minutes release, you get a bearish candle. You normally, the next 5-minute candle is likely to be bullish, and then the next 5-minute candle after that is more times than not is going to be bearish. Now there are times that this is not going to happen, but 9 out of 10 times, this, if you want to go back and test every FOMC or NFP release, more times than not, you'll see that pattern. Now CPI is different, so which is actually why we lost here on this Wednesday, because it was CPI. So CPI actually did the opposite, right? CPI, you normally have a spike up, more times than not, you have a spike up or spike down, and then you normally have a steady retracement. So CPI is more times than not often this way, and then something like this. And then back to news price. So sometimes NFP and FOMC are going to follow the same thing, but more times than not, NFP and FOMC will have this pattern. So keep in mind inverse, right? If it's bearish, you do the inverse. CPI is more than likely, and this is why we got burned during CPI, because I was anticipating this, but I also journaled the result of this. But yeah, so during news, if I'm already in a trade before news, honestly, because of greed, you know, no matter what level of a trader you are, sometimes you'll fall into this. But yeah, so long as I'm not over leveraging, maybe I'll be in like a 0.25% per risk trade or 0.5. So I really don't care. So I'll be waiting for these 2 patterns to line up, and then I can get my money back if I hit stop loss.
Yeah. And the other thing is, what's it called now? So yeah, when you said gold was at 18, was it 1811 or 1812?
Yeah, gold was at 1812 when I called that.
So when it was there, when it was there, let's just say when that whatever happened, that what's it called, that rush or whatever happened. Yeah, when that happened, let's just say you went all the way up, like it went all the way up. Now, how would you will price come back to that point again, like 1812 around the area again, and then go back up, or will it just go up all the way?
So the thing with gold, I mean, that's a good question. Gold is a rare commodity, right? You can make more of it. It's not like cash. It's not like some other cryptos right there. Some other cryptos that you can actually make more of. So gold is limited in value. So gold is one of those things that it might take off and never come back, and probably gold is gonna go to 10,000. So if you are still at 1812, I mean, sure, maybe, but I really wouldn't hold my breath. Maybe after a year, maybe after something like that. So something like gold, and that's why all this instrument, that's why I actually like being a day trader, because I'm just in and out. But but ideally for gold, okay, if I was trading gold in the long term, because I'm guessing. So are you like a long-term gold trader or something?
No. I'm like the day trader like you probably.
Okay.
To be honest.
So for gold, if I like, okay, is it likely to come down here? I mean, sure,
Yeah,
but
because
I would need to understand like the why you would want it to come down here, right?
no. I'm
Mm-hmm.
just saying. You know when it happened, when he
Mm-hmm.
went all the way up, when he went
Mm-hmm.
all the way up to like 19. What was it? 19 whatever 19.
2032.
Yeah,
Uh-huh.
2030. When he went just like a few weeks ago, isn't it? Yeah, when he
Mm-hmm.
went there, um, it won't. It probably will come back down, like you said, maybe 1 year later. But a few years ago, I think gold was trading in the 1400s, wasn't it? 1400,
Yeah, yeah.
50. Yeah. Now it's in the 1900s and 2000s. So maybe in the future it could go to 2100s.
Mm-hmm.
Yeah. Right.
Yeah.
Yeah. So maybe it might come back down. Who
So
knows?
so for me, for that one, what I would say, let's look at what's happening in the world. So hey, what can you see happening in the world? A bunch of countries are trying to move away from the US dollar, right? So some of these are the larger economies, Saudi Arabia. Um, give me one second. Saudi Arabia, India, Bangladesh, they're trying to settle their payments in their own local currency. And also Russia. And also some other thing I'm hearing out there on the grapevine is that they're trying to come up with their own currency, with their own special currency to rival the US dollar. So what you expect in the near term is that the US dollar will be weakened. If gold is to, so due to that, what you call that is like geopolitical effect. So you have all these realignments in the political platform. So what do you expect? If the USD is going to go down in the short term, you expect gold automatically or inversely to rise. On the other hand, this geopolitical alignment or realignment, you're expecting there to be uncertainty in the market. So what does that automatically tell you? That people or smart people will be moving their money to what? Give me 1 second right here. I'm trying to change something. Smart people will move their money to gold and other safe haven currencies. Okay, that's one thing. The other thing is inflation, especially in the US. So these inflation numbers we're being told about, to me, they don't really make sense. I think inflation is a much larger thing, not just in the US, but in worldwide. So again, what's inflation, a hedge on inflation? Gold, right? Gold is one of the traditional hedges for inflation. So you expect that same thing, gold will keep going up. Now, I do expect the US to step in, hopefully, and we'll also see during who the next president will be. But one thing I've also learned is not to bet against the United States. So I think the United States will fight back, whether it's using sanctions or whether it's using any other economic apparatus they will have. And then maybe after a year or so, the US dollar will be as valuable again, which might bring back calmness in the markets, and then gold will start dropping back down. But for right now, based on everything that's going on in the world, not even looking at technicals, to me, it makes sense that gold will keep pumping up to between 2050 and then maybe to 2100. But expect a short-term reversal around 2050, 2070. And then if it breaks 2070, the next psychological number is around 2100. But that's only using fundamentals and not even looking at the charts or technicals.
Yeah. All right. Bro. And then yeah, I'll ask the rest of the questions tomorrow. But there's one last thing. You know when you said like CBDC,
Mhm.
the
CB what?
CBDC, the CBDC. You know the central bank
Oh,
digital
yeah,
currency.
yeah, yeah,
You know
yeah,
that, right? Yeah.
yeah, yeah.
So when that does come, what do you think will happen? Do you think Forex will ever like? Do you think Forex will finish one day? Do you think they could just crash it?
Oh,
And
no, 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 no. So it's that's a good question. It's similar to how um you've heard of this bill that's trying to ban TikTok in the US. So here's the thing.
yeah.
Some of these things you cannot. I used to think that way. Again,
Yeah.
I wasn't born in the US or anything, but I used to
Mm,
be blind to some of the things that were happening around the world. But then one thing I realized is that whatever you see in the media, like that's just what the here's the thing, like there are people who make the world the way it's supposed to be. human beings ideally are structural species. We deal with
Yeah.
hierarchies. So there's nothing that just happens out of even markets. Markets don't just move just because they're supposed to move that way. There's
Yeah.
patterns to markets. There's liquidity that's pumped in at certain price points. There's with liquidity that's drawn out at certain price points. So Forex is not going anywhere. TikTok is not going anywhere. One thing the West or uh, what people call modern, not modern, developed countries cannot do, they can, Forex gives a lot of income to people. So not everybody, of course, can get hired or can get a full-time white collar job, right? So
Yeah.
there are a lot of people who are making millions and hundreds of thousands from TikTok, from Forex trading. And what that does is that it's a revenue stream for the government. So Forex is never going to go anywhere. TikTok is not going anywhere. The worst they can do, or the most they can do, is try and regulate it. So I know, like during
Oh.
this new administration of Biden, they started having crypto taxes. So before you weren't really being taxed on even Cash App, right? So they started taxing Cash App transactions for business Cash App business accounts. So the most they can do is tax it or increase taxes on it. But Forex cannot go anywhere because we have all these currencies in the world. So at the very least, we'll just have a new instrument to trade. So same way, Euro USD has always been there since whenever they started trading it, right? So Bitcoin just became a tradable instrument. I don't know how far back. So it's gonna be, once we get this CB, whatever you call them, it will
Yeah.
just be a new instrument that people are gonna trade. So
Okay.
Forex is not
Yeah.
going anywhere. Gold is not going
So,
anywhere.
yeah. So if they, let's say they replace the currency, like the USD, the dollar.
Mhm,
So
mhm,
let's just say they do this. They will, of course, they'll make a digital currency. So let's just say one day they make like a one world currency, because they probably
mhm,
will do that. Let's just
mhm.
say they do that. So what would happen to EU? Like AUD, USD, GBP, USD, all of this stuff? How will they
It
just
will
give a
be
new
it will
name?
be it will be the same. It will be the same. So nothing history, the only thing that changes is technology. So everything is literally the same. Everything, the trading has actually always been there. The only thing, right, way back people used to trade barter trade, right? Give me 1 gallon of oil, I'll give you 4 sacks of maize. That is literally trading. The only
Yeah.
thing that changed is the technology and is the instrument. So whatever they do, it will be the same thing as is right now. The only thing is that maybe we'll be trading USD coin to the Euro coin. It will be literally the same thing, just by another name.
Oh,
Yeah.
true, true, true. Yeah. So
Yeah.
gold was definitely still stay. Basically, silver, gold, oil, all these stuff will still stay. Like
Yeah, they
the
will still say all these are the new things. It will just be a new name and stay still same charts, same analysis, same lower lows, same lower highs. So it will be the same thing.
oh.
Yeah.
Yeah, and I'm not. Yeah, and one last thing. When you said let's just say yeah, there's a thing that they're making, that they said that, for example, for people in the UK and maybe in America as well, or in the West, they said
Mhm,
that there will be like a cap, and for your bank account where you can only have like 20,000 digital uh coins or digital notes, whatever. So
mhm,
let's just say you do this. You can't have more than 20,000 in your bank account. If you do that, the government will say, oh, you have to spend it, or else it expires.
mhm,
Now let's just say you put that 20,000, or you put 5,000 or whatever in your Forex account, like how we're
mhm,
doing it now. You could still
mhm.
multiply it. So we could still do that, but the normal person that doesn't do Forex or anything, they're gonna have to spend it, right?
See,
Mm.
that gets to another point where you have like control. Eh, that's I don't it's gonna be hard because ideally that's like controlling people. They can talk a lot about that, but it's not gonna happen. Unless maybe one day the whole world is under one new order and it's so dictatorial. I mean, there's always talk that eventually there will be universal income for everybody and people will not really have to work and you just get maybe $1,000 every month from the government. But if you think about it, the markets are mostly capitalistic, right?
Mm.
So there's always gonna be, greed is what defines the world. So there always has to be some way for money to be made. So all these others limiting or what, I don't think they can ever limit and say that, oh, you can only have this and this. And even though they do that, right? There'll be a lot of loopholes. It's the same thing as taxes, right?
Oh,
We
yeah,
always hear these news of politicians being told that they don't pay taxes. It's not like they
yeah,
don't pay taxes. The law allows them to pay lesser taxes than the common person. So
yeah,
there's always going to be a loophole. This. So keep in mind one thing, right? Whenever
yeah,
you're seeing all these changes being made in the geopolitical environment, they're not being made by aliens. They're not being made by something that's not of this world. They are being made
yeah,
by people, as far as we
yeah,
know. So inherently, people are greedy. Inherently, people want to make money and people want to live a good life. So all these are the things you hear. To be honest, just consider that as noise, and that's just meant to scare certain groups of people, so that
mm,
politicians that align to that group can quote unquote have a following and say, "Oh, this is what the government wants to do. The government will be controlling your money." No,
mm.
yeah.
True,
So
true, true.
don't, yeah. So whenever you always see these major political things happening in the political arena globally, always remember that these people are human. If it was you in that scenario, really, would it make sense for you to go that way? So
Mm,
all these people, they're in the same boat. They're friends. They make money whether the markets go up, whether the markets go down. They stash their money elsewhere. So for us, the best we can do until one day, hopefully, we get on that level is to play the same game these big people are playing. Forget about
yeah,
everybody else who's worried about, oh my God, we are not going to have TikTok anymore. That's just food for the masses. Always see it as a smokescreen. Ask yourself, what is behind this? What is possible for this? Right? Like
yeah,
for example, right now, if any other pandemic ever happens, guess what? I will go and buy shares for Zoom and all this web conferencing
yeah,
applications or companies. I'll buy shares for what? For food delivery services, right? Because I know, hey, what happened during the pandemic? Shares for like Zoom skyrocketed by what, 100 whatever percent, right? But next time, right, the same pandemic, you'll have people who are affected by this past pandemic going through the same thing, being poorer and poorer. But if you just look back and see there's a pandemic coming, you're coming, or there's this realignment coming, instead of me being afraid and being what and what and starting to shelter in place, what happened last time? It's more likely to reoccur. Let me go and do this, and then you'll make a ton of money just by having that little knowledge.
that's true, bro. Yeah,
Yeah. So yeah, just use it as, let it be like a confluence. You see, like how we always have these trading confluences. Everything that just happens, let it always be a confluence. Ask yourself, what is this likely to do? That's it. Don't worry about what people are doing.
mm,
Most people are broke. Most people are normal. Not in or live a normal life, right? They grow up,
yeah,
have kids, and that's it for them. So, but if for you as a trader, you're following this, it means you feel like there's more to life than this. So yeah, when everything else happens, that's just noise. Look for what's behind it and then follow the money.
of course, yeah.
Yeah.
All right, bro. Thank
All right, people. Does anybody else have any questions? If not, I will see you guys tomorrow. Today we didn't have any trades, but for right now, what you see right here on US 30, you can start drawing a trend line because we might start having a reversal to the downside. So keep in mind between 11, starting like 11:30 a.m., we normally have some sort of reversal. So you can look for a lower high to be established, and hopefully it's going to be in this supply zone. And then once a lower high is established, you can look for a sell either. So this is a trade I'll mark up and I'll call. So this will be an official trade that if it comes up, I'll take. So I'll wait for a lower high to be created, and then I'll wait for retest of that trend line that created the lower high, and then even better, a closure below the 9 EMA. But ideally, now here I can look for a sell on US 30 because you can see that momentum has started going down. And this trade again will be 50 pips TP, 50 pips take profit. So if you're on the charts, just wait for a lower high to be created and then draw your trend line, wait for the retest and closure below that trend line. And then at that point, the trade is likely to go in our favor. So if that trade shows up, it's a trade that I'll count towards the returns right here. So this is, trading is always a patience game. So this is, just wait on that. And then if it comes, just take that. And you can see what happened on gold, right? This is why it was dangerous, very, very dangerous to attempt to sell on the retest of that trend line. So this is what I said, right? Let's wait for this hourly candle to close. So at this point, and remember we were looking for buys earlier at this retest of the 15-minute bullish low or demand zone within a demand zone. However, even then the buy was still very sus, because we could have, because ideally this is where the trend line on the hourly is. So we could have easily bought there, and then this candle continued dipping down. But right now, excuse me, this hourly candle closed above this trend line to the downside and closed above this trend line on the upside. So to me, and you can see we are in an hourly bullish low. And then what else? A Monday low. So last week's Monday low. So for any buy on gold, it's better to wait for the retest of the hourly bullish low, which is around 1981, which should line up with either 1981 or wait for the retest of this hourly trend line on the downside. So either 1981 or 1980. So between 1981 and 1980, watch what price does around that area, and then you can look for a buy. Looking on the 5-minute, if prices to continue trending up, we need a possible high low. So that high low will possibly be made around 1980, 1981. You know, simple stuff. And then you can enter a buy. But other than that, I will see you guys later. Watch out for those two instruments. See you guys. Bye.